For more than 150 years, Lehman had survived every crisis.
At the center of the storm stood a bank called Lehman Brothers.
For more than 150 years, Lehman had survived every crisis.
But in 2008, something inside the financial system finally broke.
To understand why, we must begin with the American housing boom.
For years, cheap credit fueled the fastest housing boom in American history.
Many of these loans were risky, and they were called subprime mortgages.
Wall Street then transformed those loans into complex financial securities.
Investors around the world rushed to buy these new mortgage products.
These securities promised high returns and appeared surprisingly safe.
Banks and funds across the world began buying them in massive amounts.
Lehman Brothers quickly became one of the largest players.
The profits were enormous, and confidence on Wall Street soared.
Rising home prices convinced many that the boom would never end.
By 2006, the American housing market began to slow.
As home prices stopped rising, mortgage defaults quietly increased.
Suddenly, millions of risky loans started to collapse.
The securities built on those loans began losing value rapidly.
And the banks holding them suddenly faced enormous losses.
Lehman Brothers held enormous investments tied to real estate.
In Nottingham Politis. As housing weakened, those investments became increasingly dangerous.
Lehman had borrowed heavily to finance its aggressive expansion.
This heavy borrowing created extreme financial leverage.
And leverage magnifies both profit and catastrophic loss.
When real estate prices began falling, Lehman's balance sheet weakened.
Assets tied to mortgages were suddenly worth far less.
Losses spread quickly across the investment banking sector.
Investors began questioning the stability of major banks.
And once confidence weakens, financial systems become dangerously fragile.
When confidence fades, even powerful banks become fragile.
Lenders across Wall Street began demanding more collateral.
Short-term funding became harder for banks like Lehman to secure.
Inside Lehman, executives realized the situation was deteriorating.
They searched urgently for ways to stabilize the bank.
Soon, Lehman reported losses that shocked the financial world.
Lehman's stock price began falling rapidly across the market.
Soon, Lehman reported losses that shocked the financial world.
Analysts began asking whether Lehman could actually survive.
The question now was no longer profits, but survival.
Financial institutions began quietly reducing their exposure to Lehman. Credit markets across Wall Street started freezing rapidly. Inside the bank, executives urgently searched for solutions. They attempted to sell assets and raise new capital.
But the market had already begun losing faith.
Potential buyers examined Lehman's financial position very carefully.
What they discovered was deeply troubling.
Lehman's exposure to property markets was extremely large.
And the bank's leverage left little margin for error.
Negotiations with potential buyers began behind closed doors.
Across Wall Street, leaders gathered for urgent discussions.
Government officials closely monitored the situation unfolding.
Possible rescue deals were discussed behind closed doors. But as hours passed, no agreement was reached. The entire financial system was watching what would happen next.
Markets across the world reacted instantly to the shock.
It became the largest bankruptcy in American financial history.
Markets across the world reacted instantly to the shock.
Banks stopped trusting each other almost overnight.
Credit markets froze, threatening the entire financial system. Money market funds suddenly faced a wave of investor panic.
I need my money now!
We've been waiting for hours. This is unacceptable.
How much longer will this take?
Government officials realized the crisis had become global.
Lehman triggered clothing. Central banks prepared emergency actions to stabilize markets.
The world was now facing the worst financial shock in decades.
Lehman Brothers quickly became one of the largest players.
Credit tightened, and businesses struggled to survive.
I don't know how much longer we can wait.
This is the third time I've been here this week.
We just have to keep trying, honey.
Governments began rewriting financial regulations around the world.
The fall of Lehman became a symbol of financial risk.
The crisis revealed how fragile modern finance had become.
Regulators moved to strengthen rules governing major banks.
Yet the memory of 2008 still shapes markets today.
Lehman's fall became a lasting warning for global finance.
And the collapse of Lehman Brothers changed financial history forever.